All right. Let's talk about dividend investing. Now, this platform is called Tasty Trade. This is the platform that I use predominantly. I use this one, and then I use Thinkorswim sometimes, and then I use Fidelity's. Fidelity has a platform that I use, right? But for the most part, about 80% of the time, I'm on Tasty Trade. And on Tasty Trade, they have something. Now, if you're looking at the screen, you look to the left, you can have your watch list here. And then if you look to the center of the screen, this is where your main charting, right? This is where your main charting will be. And then if I were to click on like trade, I could come to the option chain. I come back over here and click on this grid, and I go back here to the main chart page. I can also, like, if I want to buy stock up here at the top where you see it says bid, sell, ask, buy. If I wanted to buy something in the video, I would click on this right here and it will bring it up down here. And then I could come down and click on how many shares I wanted. Clear that out. Same thing if I wanted to sell shares, or maybe, if I wanted to short, I could do it here. I could also come over here where if I brought this out like this, where it says bid, ask, I could click over here and buy stock, right? Right on the anywhere where you see like the ask and bid, you should be able to click on it and buy and sell stock. I'll close that up. Now, even over here where you got bid and ask, if I click, I can buy stock, right? That's that. Now, some over here as well on the right. Now I can change my watch list over here to what I want. This is my own personal watch list that I made that I look at every day. And then what I do is I make my watch list over here of the stocks that I like to watch every day. And then if it's another watch list that I want to look at that is on the platform that they have already made up, I'll come over here. And when you come over here to the right here where you see like this at the bottom, these bullet points, you would click on there, and then you could come up here, and then you could where it says watch this right here. I got futures micros up. I click this little drop down menu, and then I can come in here and find a different watch list that Tasty has on, right? Now, one of the watch lists that they have, like you can see it says Tasty, and then it's an arrow, and I got other watch lists that I can pull up, and you see it says crypto. Then I can pull up crypto, I can pull up Bitcoin ETFs, I can pull up Ethereum ETFs. Right here, I can come in here on dividends, and then you see it says dividend aristocrats and dividend champions. That's where we're gonna be working at today. We're gonna be working right here. So if you come over here to dividends, and then you click on dividend aristocrats. Now, I used to remember this stuff off the top of my head. Now, with dividend aristocrats, I'm just going to Google it just to make sure. I'm almost certain it's like stocks that have a dividend for, I think I want to say like 25 years in a row, they've increased their dividends or something like that. But I just want to be sure. Let's see. Dividend aristocrats. I just want to make sure I'm giving out the name. Dividend aristocrats are companies that are part of the S&P 500 and have increased their dividends in each of the past 25 years. So these stocks, they already have the watch list curated for you, so you don't have to go anywhere. It's right out. They all here. All of these stocks are inside of the S&P 500, and the dividends have been increased for the past 25 years. Now let's go look up dividend champions. I want to say dividend champions may be 50 years, but I want to make sure dividend champions. Let's search, get this definition for you. All right. Dividend champions as of November 19th, 2024, all stocks that have raised dividends for more than 25 years in a row. So these stocks They may not be in the S&P 500, but they have all increased their dividends for the last 25 years as of as of today. Now, the good thing about that is, let's see, you have all that information now. So at this point, if you're somebody that you're like, hey man, I ain't gonna do like active trading day to day. I want to buy stocks. I want to build a portfolio, and maybe you work on getting like dividends coming in, maybe some form of stream of income when I get older as I retire, something like that. So I'm assuming that's what most people are who doing that are trying to create an income stream. And that's you could use these two. So you don't have to, you can come here and you can pick either one of these. Now you may say, well, all right, man, once I do that, that's a lot of stocks. Now what I do? What I would do is try to see. I would probably start with the aristocrats first because they're inside of the S&P 500, and the S&P 500 are more known stocks. Some of the other stocks and the champions are probably some of the stocks probably in both groups, but all of these are inside of the S&P 500. So then I would come here, and one thing you can do, man, is just come up here at the top and click on change percentage. Now today, even though we have a down market day, right? One, two, three, four, five, six, seven stocks are up today. So we're gonna start with the one at the top, which we all know, Walmart. WMT. I know that one. That's Walmart. Look at this screen. This is a great chart. When you're looking at a chart and it's up and to the right, that's a great chart. Up from the bottom here, up and to the right. Now, what you would do, or what you could do, is come over here on overview. Now, I have a daily chart that you're looking at, and each candlestick is a day. Now, if you're going to do something like dividend investing, I advise you to use something maybe like a weekly chart where each candlestick represents a week, and maybe look at something come out maybe like 5 years. And look at Walmart for the last 5 years. So you can see, and we know Walmart. All right. So we see it's right now it's trading at $87 a share. Um, right up here at the top, you see where it says volume, it says 8.62. So 8.62 million shares have already traded today. You see it says NYSE, that's the New York Stock Exchange. Letting you know what exchange that it's traded on. And today, uh, Walmart is up almost $3 today and climbing on a down day in the overall market. Then you can come over here to the right. I'm gonna make this a little bit bigger. I don't know if you guys can see it, but over here on the right, it says dividend. It tells you how much of a dividend it pays, right? 21, right? So it says 21 cent. So it pays 21 cent per share. And you got the last time it paid dividends right here was August 16th. So more than likely, we should be having another dividend coming up. Now, if I come down here and click on the bottom where this dollar sign is at the bottom of the screen, says dividends December 13th. So we got a dividend coming up in a month here. And you can see you got your and some of the other things I'm not a real big fundamental trader, but if you want to get into that, the platform has it. If I come down, I could click on news, or we could look at news and what's going on. So today, Walmart is up when the rest of the market is down. So what's going on? Walmart raises annual forecasts again, signals holiday shopping surge beyond essentials. So they have raised their annual forecast. Like Walmart is saying, like, hey, we about to have a holiday surge, a holiday shopping surge, and we gonna make some money. So you see that news, and if I click on that article, you can see it comes up. So it pulls up here. You see Walmart sees growth in sales across all income groups. Retailers start holiday deals earlier than usual. Adjusted earnings per share of 58 cent beat Wall Street estimates. Raises fiscal 2025 adjusted profit range to 242 to 247. Shares of Walmart up 4.4% in early trade. And you can read the article if you want to go into it and things of that nature. Now, that's your news. Now we'll come down and then we'll do, let's see. I wanted to look at now. If I come over here to the left, follow my cursor over here to the left, right here, we got another, and we could click research news. It's going to be the same thing. The news should come up right here as well, if I'm not mistaken. Some more stuff on the company. All right. So when I click right here, we got research. Excuse me. Drink some coffee. All right. Right here, here's news. And now here's the same thing. Now, what I did when I came back over here to put this in the middle, this little chart right here, I changed it back. So this way I can look at the market and see what's going on in the market, right? And I can still see what I'm looking at on my center screen. I just want you guys to notice, every little nuance to the platform that you can do. I'm gonna try to give you a little brief synopsis. All right. Now we got news. Now I can click on financials. Now, once you get into reading financial statements, this is where you come to do that. You can, if you're going to be a dividend hunter, you know what they may call you, someone who's focused on dividends, you might want to get acquainted with this. You don't have to, right? You know Walmart. There's certain thing like certain name recognition, you understand and this is Walmart. So look at the income statement. Look at revenue. Look at net income. You don't see no negatives on this sheet. It's Walmart. Assets over liabilities. Assets over liabilities. And you can click on it and you can come down here. So it's Walmart. So the financials look good. I mean, I don't think anybody that is familiar, excuse me, with trying to work on uh not saying but anyone who is familiar with American culture understands Walmart. So I don't think you need to look at the financial sheet, but if you want to, here you go. Then you come in here and these are ratios. This is other stuff like volume, 10-day average. You can look at the volume, see the market cap of the company, income statement, per share data, other ratios, gross margin, return on equity, price to book value, enterprise value. Now I won't go over what all of those things mean. You can just basically just Google those things and it'll tell you what they mean. I'm showing you how to find and hunt for decent companies that you can invest in long term and how to find them and invest in them and earn income by collecting dividends. Let's go look at another stock. So we got Walmart. I see KO. Now I know what KO means, right? That is Coca-Cola. So let's go look at Coca-Cola's chart. Now Coca-Cola has been going down. Now I want to say this though. If you're a dividend investor, are you concerned with Coca-Cola going down from 72 to 61 over the past few weeks? You may, but then again, you may not because it's Coca-Cola. We know, let's zoom out and let's look 20 years. Look at a 20-year chart. Look at Coca-Cola. If you go back from 20 years from somewhere back here, it's still above where it was. And they've been paying a dividend over that span. They've stayed in the S&P 500. Let's go and look and see what Coca-Cola's dividend is. Coca-Cola has a 48-cent dividend. So something like it pays more of a dividend. Now, Coca-Cola is for the most part just doing what Coca-Cola does. And I mean, when you have stocks that are dividend stocks like Walmart, Coca-Cola, let's see, maybe Pepsi, some cereal companies, maybe General Mills. Most of your growth stocks, a stock like Tesla, Netflix, these are companies that you want to try to maybe make money in. These companies are taking money and reinvesting it in the company and trying to improve technology so to make the stock price grow. So you're making when you make money in these companies, you make money on the price of the stock going up. Thus the term growth stock. These dividend stock companies, they are paying their shareholders for investing in them. So that in the form of dividends. These stocks over here, I wouldn't be too much concerned with day-to-day trading action, right? Something like this, I already know what this was. This was COVID. That's why you seen this. And all stocks went down. When you have something like that, it doesn't matter what you're in. All right, let's go back to the watch list. Let's see if I can find another. And if I was to go look at let's look at the balance sheet of Coca-Cola real quick. We'll look at the financials. Look at it. You don't see a whole lot of negatives on. You don't see any negative signs on here. You see, you see assets over liabilities. You see revenue, net income. You don't see a lot of these stocks. Let me see if I can find another one that I know. AbbVie, PG, this is Procter and Gamble. Procter and Gamble pays a Procter and Gamble last dividend, they paid out $1. They paid out a whole buck, but the stock price is $169.89 currently. But they pay out a whole buck. This is how you would do it now. And one other thing, just to go a little bit more into it, some people who do dividends. So like we looked at Procter and Gamble. Let's see, we got Procter and Gamble paid a dividend on October 18th. Walmart paid one on August 16th. Let's look at Coca-Cola. Coca-Cola is paying one. It says November 29th. So that may be the next one when it pays. But the point I'm trying to make is you want to try to set them up to where you have stocks paying different dividends at different months. So then you may have a check coming in Coca-Cola 1 month. Then maybe 1 month you'll have Walmart paying, and then maybe the next month you'll have like AbbVie or Procter and Gamble paying. So you have different stocks that's paying dividends at different times, and then that's how some long-term investors create that income to have them coming in. And I just, this video, I pretty much to recap it. I went over what watch lists to look under. You can look it up. The link to sign up and get an account with Tasty Trade, I'll drop it in a note of this live stream. It's in my last one too. Follow me on YouTube. You'll see it in there as well. You can I lost my train of thought. Oh yeah. So I was recapping the video. And when you're doing everything live, yeah, I'm just doing it live, no editing. I like to just get one take. When you're to recap this, going over how to find the stocks you want, what list to look through, and then even how to look on the financials and look at the chart. If you're doing long-term investing, my advice is to do something, maybe go 5 years out. Put it on a weekly and go 5 years out and then look at the chart that way. Let's see if it's going. All right. Look at like 3 to 5 years, and then look at weeklies and then watch things like this. And in my opinion, this may not, you may say, man, this to me, when the Coca-Cola is sold off like this may not be a bad place. I would look at this as like some form of support right in here. I expect Coca-Cola to give us a pop right here, and maybe give us a little up move or something like that. So, you know, just looking at things like that in the chart to see where you want to move your money around and stuff like that. And I would start off with aristocrats. Now, there are some companies that if you find a company that's paying an outrageous dividend, it's a reason why. It's some risk associated with that company. For every gimme, there's a gotcha in the market. There is no free ride. So if you find something and you're like, man, this company paying this dividend is crazy. It's a reason why they're paying that crazy dividend. And you need to investigate that. You still may be cool with taking the chance, which is fine. But just understand that ain't no free lunches in the market. If you're getting something over here, you're risking something over there. Just so long as you guys understand that. And, hopefully you guys got something out of this video. Hit that little thumbs up icon.